Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully, you guys had a very good day in the markets today. And in today's action, the S&P up 0.75% and the Qs up 1.25%. And the bounce size is quite decent at this point in time here, guys. You got a almost 100% full retracement of the most recent leg of selling on the S&P, and on the QQQs, almost the exact same thing. A very strong bounce by the bulls, but notice coming just short of the 200-day moving average on the Qs and just short as well from the 200-day on the S&P, and also into resistance. So are we going to perhaps revisit some of these lows or close upon a failure of a recapture of key structure? Or do the bulls have it in them to put in 3 green days in a row? Something, guys, that we have not seen for about a month and a half. You'd have to go back to this period of time in mid-February. How sad is that? Not 3 green days in a row in over a month and a half. Tomorrow is going to be a very big day, last trading day of the week, and I'm going to prepare all of you guys for it in today's video. Speaking about today's video, section number 1, we'll go over some key news elements from today. Not too much in the form of updates from Iran and the United States. The ceasefire talks are still underway, and the market has responded well to the premise of them. However, we know that at the current time, still no ships going through the Strait of Hormuz, or barely any. Still no conflict resolution, at least formally. And number 3, still no actual daily uptrends for some price action repair. So still a market environment to be a bit cautious, but I will be taking you guys through other news headlines and more statistics that occurred throughout the day today. After that, we'll go over our technical analysis portion of the video where we go through the S&P, the Qs, and most of our major sectors. Check on the rotation, which sectors have been performing the best since the bounce started, because it's very relevant. We spent a lot of time on that yesterday just to get an indication of what do we possibly want to be positioned in on the other side of the conflict? Which sectors have the best momentum in terms of exit velocity from this entire conflict? So we'll go over the indexes a little bit. After that, we're going to get into our big tech names as well. Many of the big tech names today having some really nice bounces, but some getting slightly left behind. So we'll once again take a look at these names and drive which of them represent the best opportunities, either for swing trades or also long-term positions. And at the very end of the video, we'll go through your guys' favorite section, which is the biggest gainers and losers of the day. 2 companies down here, down double digits. Nike and Restoration Hardware having their earnings yesterday, not doing too well. But several other very fun companies were down today, and possibly good opportunities on the horizon there. And of course, we'll take a look at some of the names that did the best today. Many recurring players. You'll see Micron here up 9%, SanDisk up 9% as well. So we'll once again be recapping some of the momentum and some of the more higher beta names. That'll be it for today's video, guys. So without further ado, let's get right into the action, shall we? So the S&P up 3/4, the Qs up 1.25, as we said. If we take a look at the heat map real quick, you'll see that the breadth today, again, was actually quite good, right? We've been paying very close attention to the market breadth. Just going to go over these indicators very briefly here. The percentage of stocks above their 20-day EMA. Look at this. In just 3 days of bounce, we went from deep oversold territory to where we only had about 25% of all stocks above their 20-day EMA, which is a historical low print and is an area in which you want to be buying. You might remember over the past week or so, we spent a lot of time describing how many statistics were oversold in terms of put to call ratio, market breadth, institutional positioning, retail bearishness, right? So many statistics telling us that it was indeed synonymous with a good location to be possibly picking some of the local lows in the market. So as a result, now you've seen breadth expand very nicely on a 3-day basis. Moving on to the percentage of stocks above their 50-day EMA. This a little bit lower though, 32% only, which just means that we've had a very nice short-term bounce, but similar to the actual S&P, we haven't really recaptured the heavier moving averages, right? The 50-day EMA on the S&P is this red line all the way up there, and since many stocks have come down with great big velocity, yes, we are recapturing shorter-term moving averages, which trail the price closer, but still no repair in terms of some of your longer dated moving averages, such as the 50 EMA, still very low, and the 200-day EMA also at a lower print of about 47 right there. Meaning, even though we've had a couple days worth of bounce, we are still very low in terms of overall market, in terms of the overall market positioning, either on the indexes or individual names. So keep that in mind. But that being said, a very decent day of rotation today. Not many sectors getting left behind. Only the oil stocks coming down, obviously from the ceasefire news. These have been some of the very hottest stocks in the market, some of the ones that held up the best during the most recent segments of correction, and now having a little bit of a pullback on their own, healthy pullback if I do say so myself. Big tech, not a bad day either. Financials, a little bit mixed. The banks continuing to do well, but the credit card companies sadly just could not keep it up. Healthcare, a bit of a mixed bag, but the sector did etch out some green. And the bottom half of the market here, the ones more sensitive to the conflict because of interest rates and inflation, not too bad. Most of your strength, though, came from industrials. Moving on to the one-day relative, you can see that even better. Most of these segments of the market were higher today. Only consumer defensives and energy a little bit to the downside, with energy being your biggest loser. And after a few days worth of bounce, guys, on a 1 week relative performance basis, well, you can see here that most of the market is indeed higher. You have some sectors that are still lagging. The ones, once again, that are most impacted by, the pressure, the cost pressures because of the Strait of Hormuz closures, which relate to inflation and pausing of the interest rate cut cycle. Industrials, cyclicals, even technology still red on a 1 week basis. And energy. Unfortunately, energy was your best performer for a while there. And now after today's big decline, sadly, it jumped to the bottom of the pack. But on the 1 month, you'll see, right? Big correction, everything else still red. Only energy still remains quite bullish. So that being said, guys, let's get into some news headlines before we jump into more charts real quick. Number one, fear and greed index still at a very low print of 16. So you shouldn't necessarily be feeling any FOMO on the indexes. Number one, because you don't really have any price action repair here in terms of a daily uptrend, nor have we recaptured many of the major moving averages, which you would like to see to really get a better sense of whether or not this market has some continuation to the upside, or if we might have to reset price a little bit lower, right? Getting rejected here, and many stocks went from oversold conditions and very rapidly increased in price. So in my opinion, a V shape like this, probably unlikely. You will have to kind of reset your price action. And as a result, fear and greed index still very low, right? Market momentum very low. Stock price strength, even though you had a nice pop, still at extreme fear levels. Stock price breadth, still also at extreme fear levels. So you're still planted at a 16 right there. Some news headlines here. Investors Intelligence Bull to Bear Ratio. We've been bringing a lot of these types of ratios up in the past 2 weeks just to show you how bearish the overall sentiment is. As you can see down here, it's very close to a 1. Usually this ratio does stay mostly positioned in bullish territory because the markets have a long-term upward bias. But when we see times of big corrections like a 2022 bear market, which is this red column right there, or the April of 2025 liquidation flush because of tariffs, those are the only real times that you get this low. And this time is no different, right? Usually synonymous with peak volatility and peak bearish sentiment in the markets. So keep that in mind. Still a nice opportunity to be carefully and slowly shopping for our longs. Moving on a bit further here, your Russell 2000 short interest percentage as an expression of market cap. You'll see that we have now eclipsed the highs of 2025. You might remember late 2025 in October, we were commenting on the channel that when you got such big concentration into only a few AI names and small caps, especially AI small caps, were running wild. You might remember that was a time whereby you had some companies like NBIS, right? Those, you remember these runs right there? Yeah, a lot of the AI trade was very concentrated, especially into some small caps, and the short interest leading in to this correction was very, very, very high, right? So that's also why you had some people building some big positions. The market unraveled, so you would be expecting this one to slowly decline as now the shorts are clearly winding down some positions. And we said it yesterday, right? The move on the S&P yesterday and today is probably more a combination of short covering from this massive move to the downside, but also a little bit of retail FOMO into the end of the afternoon yesterday, and even a bit of continuation till today. In terms of net long positioning, you'd probably argue that that's not the case just yet, but still something to pay attention to. Your OPEC trend, just because we have to comment on this because the strait is still closed, your OPEC trend right now in terms of output of production, you'll see here that we are now below the 2020 COVID lows of output. We are missing about 10.6 million barrels per day over and above regular production levels. So this cannot be repaired in a single day. Even if you do get a ceasefire, there will be some remnants of the conflict. That is very clear. I've said that multiple times on the channel as well, right? Even though the equities market can get ahead of this situation, meaning that your price action, right, even though oil can stay high and the inflation impacts and the supply chain impacts can be felt, the markets can recover, right? more quickly, then you would see the lasting impacts of this damage right there. But definitely something just to keep in mind, because we know that the markets may still be a little bit choppy here moving forward, even if we do get a ceasefire or ships starting to resume through the Strait of Hormuz, getting this back up to trend, as you can see during COVID, right? It's not instantaneous. It takes months and months and months. Moving on a bit further here, the Trueflation Index print just came out for the month of March, which is very good. We went from 1.77 down to 1.26%. You might remember that I really enjoy this one. So we were trickling up here. This measures 15 million different products on a daily basis, but some do get reset only at a month-end basis because that's when they report. And some of the main drivers here to drop it from 1.7 to 1.26 were drops in transportation, food, utilities, and housing. Now, of course, some of the transportation and utilities metrics may have a slight uptick overall into the month of April as we continue to see the cost impacts of the higher price of the barrel of oil. Moving on a little bit further here, you have a record momentum day yesterday. This is called the NYSE Tick Index, spiked to 2329 during yesterday's trading session. The indicator tracks the difference between the number of stocks moving up and the number of stocks moving down on the New York Stock Exchange throughout the trading day. This outpaces the record that was set in April 2025 at the end of the Liberation Day event, right? You remember that massive market move there, that 12% day on the indexes, or close to it, right? 10, 12% massive day overall. So this right here, a very solid day in the markets yesterday, shows a lot of momentum. There was a lot of pent up either short positioning or people looking to go long. And yesterday was kind of a perfect storm of just unleashing the markets to the upside. So you did have record amounts of momentum yesterday. But once again, it could be a combination of just short covering, but also a bit of retail FOMO, right? Yesterday's bounce didn't really change much, nor does today. You have to get the follow through. Step number one is complete. You got a very nice size bounce. Now the bulls have to convert this into a new daily uptrend, so keep that in mind. Moving on a bit further here, global stocks lost $12 trillion in the month of March, the largest single value wipeout on record in a single month. Now, obviously, guys, these drops will be bigger and bigger over time because the market gets bigger and bigger over time as well. However, in terms of market cap, this was your largest decline on record. You would have to go back to COVID to see larger wipeout factors in terms of a single month of change. So please keep that in mind, guys, right? March is a very brutal month, right? Not only was it a very brutal month in COVID, during COVID, right? Last year as well, March and April were not very good, but during the tariffs, right? And now the month of March was very brutal as well. Moving on a bit further here, the VIX falling below 25 currently after staying above it for at least 8 trading days. So keep that in mind. Usually in terms of the hit rate, I know it's very small. You might need to break out the binoculars for this one, but the averages is what I'm highlighting right now. Just focus not so much on the short term, anything under 1 week. Just focus about 2 to 3 to 1 month out, right? The returns start to get a bit better in terms of normalization. Your average returns get really good 1 month out, but especially the median returns as well get really good about 3 weeks to 1 month out too. So please keep that in mind. That's just to say that over the next 1 month, it can still be choppy as we kind of move through the after effects of this conflict. Even if the conflict is resolved and the ships move through the strait, you will still see a bunch of headlines come out of the Middle East, and you'll see a bunch of headlines coming out of the economic impacts that this has been having across Asia, across Europe, and possibly back to North America as well. Moving on a little bit further here. And here we go. This is the Thursday print. So if you're looking forward to tomorrow being the third possible green day in a row, Thursday's not really been very good to us this year, guys. Not every Thursday, but 9 Thursdays this year so far has been the worst day for the markets, right? So keep that in mind. I don't know what's going to happen tomorrow, but this statistic I thought would just be a funny one. You can't really derive anything from it. It's just a bit humorous that, since the 1920s and 30s, right? There's only been a few times where you had such bad Thursdays, and we're currently going through one of those years. Moving on a bit further here, Artemis 2 lifted off. This is the mission towards the moon. We talked about this one last week. Very fun, guys, to see them blasting off towards the moon. They will not be landing on the moon. They'll be going kind of going around the moon and then coming back. But fun to see. This one actually done by NASA. It's been a very long time, guys, since the 1970s that NASA has actually done something of this magnitude. So very cool to see this one. They had a few problems, a few delays before getting off, and now fun to see them underway. So we'll have to keep track on what's happening with those astronauts because the ellipse that they're currently making around the moon, right? They're basically, well, without showing you a drawing, right? But here's the Earth, here's the moon. It's a terrible circle, I know. Basically launching, gaining velocity from orbit, and then launching themselves beyond the moon, and then taking the moon's orbit all the way back. And I looked at this drawing, I said, man, the math needs to be pretty perfect, because if you come in here with too much velocity, where are you going to go, right? Where are you going to go? So hopefully everything goes all right for that mission. It should, obviously, right? So that's always a fun thing to keep in mind. Speaking about more about the space trade here, Amazon in talks to acquire satellite operator Globestar, GSAT. Now, a few people, I'm sure a lot of you, not a lot of you, but a few of you probably in the comment section may be participating in this one. It's been a very popular space stock as of last year, and now they're finally getting a tender offer potentially from Amazon for about their current market cap, which is why you do see the stock up here about 16% in the after hours. Obviously, guys, you can't chase on news like that because they'll price in the market cap immediately, right? So there you go. Very interesting. Looking to push to compete with SpaceX's Starlink. This is something that Amazon's been doing now for the past 2 years under the banner of Project Kuiper, which is also one of the reasons why I love Amazon, man. They're a jack of all trades. They have a bit of business in every single business, apparently. And last but not least, gold. For all you gold bugs out there, gold is currently making history. We were watching for the cross, and it's finally happened. Gold makes up 24% of global central bank reserves, surpassing U.S. Treasuries at 21% for the first time since the mid-1990s. Here's the chart. Here's the cross. It happened a little bit in 2025, but now the cross is very clear. Look at that. So at least gold now is being backed more and more by central banks. The acceleration, as you can see, started in 2024. Big acceleration in 2025 with the tariff situation, and more acceleration now, meaning that gold is going to be a bit more resilient in terms of price action, meaning you may not be expecting a revisit of like oops, I don't know why I did that, but a revisit of the 2000 levels, meaning you're probably not expecting a massive crash on the price of gold, because the people holding up the price are people who hold for a very long time. Those were your news headlines of the day, guys. Hopefully you enjoyed that. Now, with that out of the way, let's get into some charts, shall we? All right, so we'll go through these charts a little bit more quickly because not much has changed in spite of the recent bounce, guys. Once again, rejecting from the 200-day EMA and also from the most recent resistance level, which is 660 down about 653. The bulls got a little bit tired here into the afternoon, and although this is a very nice bounce, exactly the size of the bounce that you would want to see from the bulls, it does not confirm the trend. We still need a trend change, so keep that in mind. The one thing that it does do, it gives the bulls a very good chance of completing a daily uptrend shift, because obviously if you only get a 30% bounce and then roll over, like if tomorrow's red, right, you roll a bit down, at least they have a ton of space here to reset the lows, and we have a big support area. If they would have only bounced something like this, like a 30% bounce before rolling over, well, then the probabilities favor the bears for some follow-through damage to the downside, right? So keep that in mind, guys. Still no trend change right now for any heavy longs or positional longs or things like that. I'm a big fan of waiting for the trend change and possibly even a recapture of the EMAs, right? You get a trend change like this and pop above the 200. There you go. You get some momentum. You reclaim the moving averages. Easy trade with a stop loss. And then we can go for the big multi-month possible expansion. Until that time, you still have to be very nimble with your trades overall, guys, right? Because we know it's very choppy. It's a very headline-driven market. And as such, on days like yesterday and today, I'm just taking profit on some of the short puts that I sold either on Friday or on Monday, taking profits, reclaiming the buying power. And if you get another day or two to the downside into next Monday, let's say, well, then we can do it all again, selling put options below the market, because we know it's a very volatile environment, and selling options is one of the best things to do in this current environment without clear direction, or at least putting some hedges on as well, right? Pretty much last call. If you guys were contemplating any hedges to the downside, if you were of the opinion that we may flush through the lows as the conflict can't be resolved, or the impacts of the conflict are too great and the market is ignoring them, well, now is pretty much the last call, guys. If you wanted to throw a hedge off there, rejection from the 200, just a hedge, right? A hedge doesn't necessarily mean that you're full short the market. But if you're the type of person, as I told my Discord group this morning, if you're the type of person that because of your either low risk tolerance or you just don't believe in the current markets, right? That's perfectly fine. That's your opinion. That's why the market is so beautiful. Because if you are of that opinion, you can put your money on that opinion, right? So if you want to, well, the hedges are now open once again for your interest. If you were the type of person back here that really felt a lot of the damage in the market, you were very nervous, you're very fearful, or you thought that it could move a little bit lower, well, the market is giving you a second opportunity to throw on some possible hedges towards those lows. So keep that in mind. Moving on to the the QQQs right now, exact same concept. Beautiful bounce by the bulls, but still, we are looking for the lower high. This is just an attempt for a lower high. It's a great location for a lower high because you get a lot of distance. We've cleared a current little micro area of resistance, which is currently support. It's not the strongest one, right? But it is there. And if ever we revisit these lows, guys, big support down here, 562 down about 554, the Monday local low. So once again, we need to change the trend. Give me the trend change and give me a pop with a trend change. I mean, they could do it from here, right? You can do it from here as well. I just need a trend change. As soon as we can see the trend change, then we can size into some larger trades to the long side. As of right now, I'm just playing the volatility. Big red days in the market, increase in the VIX, selling some put options below local lows or below key areas of support. And on green days from those trades, taking profit, getting the buying power back, and just doing it all over again. Moving on to the XLF financials right now. Financials, not a bad day, but they started off a lot better. Unfortunately, couldn't get it done closing near the highs, right? So now we have reclaimed the 12 EMA at least, which is good because we haven't done that in a while. Beautiful engulfing move, but same concept. You got to give me the trend change, right? I'll be a stickler on these trend changes, guys, because unless you give them to me, it's just the same type of price action, right? Great bounces, unwind. Great bounces, unwind. So what I want to see is them being able to convert this great bounce into an actual trend change. Overhead resistance right now, 50 up to about 51.5. And the below support area down here, about 48 down to roughly 46.75. Financials coming out of daily oversold conditions and also into a very nice monthly level of price action, which is the 26 EMA. So I'm still a fan of building some longer term positions on many financial stocks that have come down a lot recently, like Visa, like MasterCard, like American Express, like SPGI, but even some of my favorite fintech stocks like Robinhood is looking really attractive down here. Not necessarily for max longs, right? But if we're looking to build longer term positions and nibble at these areas, I think the valuation is very fair for Robinhood at current prices. So many different opportunities in financials depending where you're looking. Moving on to healthcare right now. Healthcare, see, this is one of the only sectors right now that has over a 100% engulfing move and a change of trend. Equal lows on the bottom, high, equal low, and then higher high. Now you got the trend change. Not quite above this 200-day EMA, which is this green line right there, but at least you have changed the trend. So that is step number one. You like to see that, especially out of daily oversold conditions. And on the weekly time frame, the bulls will be looking to close near the highs to really consolidate this area and get it back because they lost it, right? They flushed it. Now, big resistance, resistance again, looking to convert as support. And as a result, now we have a tradable bottom on healthcare, meaning if we're going for larger swing trade longs, your stop is clearly there, and then you'd be in the trade and waiting for this weekly trend recovery, which will then translate into the continuation of this monthly uptrend. Because all we were ever looking for on healthcare was a monthly higher low for further trend continuation. So if you were if you're looking forward to taking any healthcare bets, let's say, right? Well, now you got the trend change, which is step number one, but still have to be trading with the stop because if ever they unwind, right, it's not guaranteed. We could easily just flush these lows and go for a deeper monthly correction with the indexes or with healthcare specifically. So please keep that in mind, right? Decent opportunities on the table right now, but we can't say we're out of the woods just yet. Moving on to semiconductors. Semiconductors up 2.25% today. Decent bounce, same as a SPY and the QQQs. A almost 100% engulfing move. It's about a 90%. It gives us a nice space to reset the uptrends, but still no uptrends at the current time. Below support stays put 377 down about 368. So keep that in mind. And then the weekly is not looking bad, but it is still a weekly downtrend in the context of a bit of monthly consolidation. If you unwind everything and flush, you're coming down here probably to the 12 EMA, and that would once again be the SPY revisiting some of these lows down here, and possibly additionally the SPY going for a bit of a red start to the month of April, maybe even coming down to the 26, which would be these highs from February. That is your max pain scenario in my opinion. No signs of that just yet, but keep in mind, this is your lead bull. So if that does happen on the indexes, this one does have a little bit more to fall, and the 200-day EMA is also down there at about 350, but not looking too bad. I'm still taking my bets on semiconductors very carefully. Like I'm not buying the absolute index because there's many names in the index that I feel have ran a little bit too much, especially on the semiconductor equipment names, but some names specifically on recaptures of uptrends such as Micron or NVIDIA or AMD, I am looking into. Moving on to IWM Russell right now. So the Russell, not too bad of a day. Same concept, right? Daily downtrend this entire time. And now you get another 100% bounce. But we had one of those here. They unwound it anyways, so you got to give me the trend change. The good thing about the Russell, contrary to a lot of sectors out there, they're actually above the 200-day EMA. So the Russell has held up better than most sectors out there, but still we need a trend change. What you'd like to see the bulls do into tomorrow is get above this area of resistance, which is 251, then at 246. You see, it's been very problematic for them over the past few weeks. So the Russell, small cap stocks, I'm not playing the Russell as an index, but I am playing individual smaller growth companies. The trend is very beautiful right now, and we're just looking essentially for a new monthly higher low throughout this phase of consolidation. So I'm still looking to slowly accumulate positions on small cap growth stocks that I'm looking to hold for multiple quarters and possible multi-years as some thematic trades, not only looking to play short-term moves or anything like that, right? No, I'm just taking advantage of this consolidation on a lot of small cap stocks out there that have dropped 30, 40, 50% from the highs to build positions. Some stocks that I've been waiting for patiently. So keep that in mind. The rest of the indexes, or the rest of the sectors, we'll go over them tomorrow, but I just wanted to recap the bigger ones that hold the most weight in the S&P, because those are really the ones that will make the indexes move. If we take a look right here at the VIX was also down today again, now under 25, but still in a very highly volatile regime that is very responsive to any headlines that come out of the White House, that come out of Iran, and other things of that nature, right? So we'll pay close attention to the VIX. We know that when the VIX is high, above 25 or close, at least in the mid 20s or above, right? It's a very nice environment to be selling put options. So very simple. You get a big red day on some stocks that you like very much. You can apply the same wheel rules that I give you guys every Sunday in preparation for the upcoming week to find some very nice sell put options, right? Selling put options well below the market and pocket some of this very high volatility. Moving on to now some of your commodities. So gold continues to be very strong, guys, right? Not only gold did it outpace the S&P yesterday, it outpaced the S&P today as well. They had a 2% day, and you can see in the after-hour session, it's up 0.73. So gold's relative strength to the S&P out of the bounce is very good. It bottomed before the S&P, and then when the S&P was bottoming, gold was already kind of on its way to the upside. We highlighted a swing trade on the break of 45.76 with a stop loss down below there. There was the entry, and you were quickly coming into take profit. I know a few people took this one, so just be mindful that you're coming into the take profit area very quickly, right? 48.50 up to about 49. It was a very decent trade, in my humble opinion. Congratulations. Now it's a little bit too late for that. Any further entries, you would have to wait for a higher low, right? But the bulls are in control of the short-term time frames, and they will seek to get a good size bounce on the weekly because we lost the weekly as well, right? So now they got the daily back. What you'll want to see is them get at least a 50 to 618 bounce on the fibs, which gives the bulls a great chance of turning even the weekly trend back around over time, and then just proceeding on to the rest of the rally continuation on the monthly time frame, which was never lost. So the bias is still bullish, but we just have to be a bit calculated on our entries. Moving on to silver, bit of the same, but silver, the relative strength in relation to gold is a little bit soft, right? So yesterday, silver had a 7% day, but today when gold was up 2, silver was basically flat. And even now in the after hours, it's kind of trailing gold, and that doesn't happen too often, but silver displaying some of the same characteristics. Daily uptrend, which is very good. And if you're in this trade, stop loss very clearly is down below there. And the initial take profit would be 83. And then obviously above, you got one level more. Sorry, I didn't put a box right there, but there should be a little box right there, right? Resistance area, which is just price action consolidation here. Resistance, resistance, resistance. So take profit number 2 area would be all the way up here, 93 to about 90. But so far, silver is indeed moving well. It will probably track gold, and silver has to do the exact same thing that gold does. They got to get back the weekly uptrend first, right? The bounce on silver, as you'll see from the top, is not as strong as the bounce on gold, only a 38.2% bounce. So trailing gold a little bit, but still not too bad. They won't diverge from each other, but gold so far has been the stronger mover. Moving on right now to Bitcoin and Ethereum. We're not going to spend too much time on this one at all because it's not doing anything. If we're looking for relative strength, well, crypto is definitely not the one, right? S&P and the Qs got phenomenal bounces. Yesterday and even today. What happened on Bitcoin today? They're actually down. So Bitcoin, just no momentum here, daily downtrend. And still, if you cannot give me a daily uptrend, well, I can't really say that the bulls are ready to reset the weekly uptrend either, right? So still in the context of a bit of a bear flag right now, meaning that the expected move might be to the downside on any further index consolidation. 60 to 55 is probably the flush level. And on Ethereum, you're looking at the exact same thing, right? Lack of follow through by the bulls. We will see, can they get it done? give me a new daily uptrend and at least go for a weekly uptrend break of 2370, then we'll know, all right, finally we got some people interested in this trade, because as of right now, we have nobody, right? Resistance still at 25 down to about 2,100. I don't know why I said it like that, 2,100. 1750 down to about 13 would be your area of support on any breakdown of the crypto trade, right? So now that's everything for your overall market rundown, indexes, and some commodities. Let's move into some big tech names now. All right, so company number one, good old Apple. Apple up 0.75% today, and the bulls not looking too bad here. We commented on the fact that Apple could have a swing trade opportunity at current prices. Just because the bulls are holding up better than most, they're going for the daily uptrend switch, which will be a break and close above 256. And the stop loss, a very easy swing trade, right? Stop loss would be below your recent lows, and the take profit would be at your local highs into resistance 280 down to about 267. Not bad, not the best risk to reward ratio, but still Apple has held up better than most of the pack, still in the context of a weekly downtrend and still in the context of monthly consolidation. But as opposed to other big tech names in this list, Apple never lost the monthly uptrend. It's just still a very shallow retracement as part of a large monthly move to the upside into the 12 EMA, so not too bad. Apple is showing relative strength in relation to the rest of its tech peers. It's just that for the long-term portfolio, I'm not really interested in buying Apple up here, but if for ever which reason we get a correction down to the 26 to 30s, that is where I'll be nibbling. I haven't added any Apple shares to my portfolios since these correction lows, just because the valuation is a bit too high, in relation to other very attractive names in the market right now. On to company number two, AMD. So AMD getting a nice bounce, follow through today, another 3.3%, but still no price action, right? So although the bulls are trying something, if you want to prove it to us, you got to break above 215, 230 resistance, which they haven't really done since January. So keep that in mind, right? AMD is a perfect stock to be running the wheel on whenever they come down to these low locations. You'll find me selling some put options, 180 down to about 170 below the area of support. And if not, just accumulating any long positions if you want to participate in AMD's thesis, right? The company right now between the 195 and 210 range, very fairly priced, between a 0.8, 0.9 peg right now, with very good revenue and EPS growth. So the long-term thesis, guys, I'll remind you, they're about a cycle and a half behind AMD. And keep in mind that most of the growth is coming second half of 2026, and then through the next few years, big EPS expansion and big revenue expansion as well. On to Amazon. So this company, 1.1% to the upside. Very nice move. Amazon also showing relative strength. They've completed a fully engulfing move of the most recent leg of selling, right? So from there to there, nice engulfer, right? So Amazon as well. We will be looking for a trend change. We've recaptured a few of the short-term moving averages, and you'd like to really see them either push more, set the higher lows, and go for the trend change, which would give you a weekly low to basically play off of, right? If you're taking it now without confirmation, you got to put the stop loss somewhere, right? It'll be down there. Amazon, not my favorite swing trade. Rather, it's a longer duration trade for me, but still, right? If we're just looking for something, see, in comparison to Apple, Amazon has a monthly downtrend. Apple doesn't have that, right? So not only do the Amazon bulls have to reverse the daily, but then they got to reverse the weekly, which Apple also has to do, but eventually they'll have to reverse the monthly as well, and possibly not being able to do it in one clean swoop right like that. So Amazon for me, only thing that I'm doing is I'm holding my leaps on this company, selling put options at the lows whenever it comes down on big red days, and just accumulating some long-term shares. Valuation around 210 is still very fair. On to Google right now. Google with a strong push as well, 2.8% to the upside, but into resistance right now, 305 down to about 295 is that resistance band. So keep that in mind. Google, same as many stocks in the market, guys, they got to get the trend change. You see, Amazon has a better engulfing move of the most recent leg of selling, and so does Apple, right? Google, still a bit underwhelming in relation to those other companies. So you got to keep that in mind when you're looking for what are the best possible setups, right? Not saying Google's not a great company. Of course it is. But that being said, Google also ran a hell of a lot more than everybody else. Now they're just into a bit of monthly consolidation. The only area that you'd find me probably nibbling on Google shares would be like under 250. I don't know if it gets there. I don't need it to get down there because I'm pretty much in from there. But I realized that if you guys were looking to buy, well, you got to pay attention to the valuation, right? At 280, it's about a 25 forward price to earnings and about a 1.6, 1.7 peg. It's not the cheapest stock in the market in relation to other plays, which is why I'm not personally buying here on Google, nor am I looking for any swing trade opportunities just because it doesn't have the better chart. Moving on to Meta right now. Meta also with a very decent bounce, but a bounce in the context of this big sweeping daily downtrend, right? So it is a very nice size bounce, but the bulls haven't really proved anything. We haven't really got back the 12 EMA. We're still well below the weekly moving averages and your monthly EMAs as well. So keep that in mind. The bounce has been very nice, but maybe Meta gives a bit of a retest to the downside as well, in which case another phenomenal opportunity to be selling some put options down below here on Meta, or just increasing your share count if you want to take advantage of the discount on this beautiful company right here. Around 570 where they currently trade, it's about under a 24 price to earnings and a 1 peg. So this is one of the cheaper stocks in the market, which is why I haven't been buying Google or Apple, but I have been buying Meta quite heavily down here. Moving on to Microsoft right now, Microsoft down 0.22%. Another company that struggled with price recently, sweeping daily downtrend and a big area of resistance above us, 380 up to about 403. In the event that Microsoft breaks down a little bit further, I mean, look at the bounce size, right? S&P had a huge bounce. Other companies had a huge bounce. Look at Microsoft's bounce in the last 3 days, barely a 38.2% bounce. So the bears are still very clearly in control of this trade, which makes sizing into longs from here, like quick swing trade longs, a little bit more difficult than on other names such as Apple, or possibly other ones that I'll highlight, right? So the chart is just not the best at the current moment in time. In the event we fall down again, I'll be doing a couple things. Selling put options below here into support, 350 down to 320. Huge area, guys. Those are the tariff lows, the 2023 highs, 2021 highs, despite Microsoft having much better fundamentals and still in the context of weekly oversold conditions. So until I see a trend change, it's very tough to say, yes, this is true monthly bottom on Microsoft. Number one, you got to give me the daily. Number two, that daily has to make a big enough impact on this weekly to then get that as well. And only then can we say, yeah, a true bottom on Microsoft for this cycle's downside is possibly established. Not yet, though, which is why I'm only adding long-term shares at 370. It's a very good deal. 22 forward multiple, PE, and a 1.21 peg. Very strong deal, but still, the turnaround story for Microsoft is not yet in full effect. Moving on to Netflix right now. So Netflix is different. Netflix, see, the chart is very nice. They've already completed the daily trend turnaround, right? So nice daily uptrend. And as a result, they had a very nice weekly bounce out of that, right? So this is different. Netflix is further along its turnaround story. This was a 618 bounce on the weekly. And then you saw when they went for the weekly higher low, what were they doing? Daily downtrend during that process. And now, right, now we're trying to set up the new daily uptrend, confirming the weekly higher low and making an attempt for a weekly uptrend. So if we're looking for follow through, easy stop loss area. Stop loss area is there, and you're looking for weekly follow through to the upside, 110, 120. Obviously, it's not going to happen in 2 days, right? This is a multi-week swing trade attempt opportunity. And also, it's going to have a lot to do with the overall direction of the indexes. If the S&P and the Qs fail the trend change, well, you can expect Netflix to also come back down and possibly have to have a deeper retrace cycle as well, right? That's why you would trade this with a stop loss if you're looking for a swing. The risk to reward is very favorable for you, but just don't leave yourself to unlimited risk to the downside, because obviously Netflix will broadly follow the direction of the market, right? If the market really sours, then this trade is not going to play out. But you have to be paying attention to this stuff in this current market environment. Moving on to NVIDIA right now. NVIDIA, 0.77% to the upside. Same thing as the rest of many stocks on this list right here, right? Daily downtrend. Very nice bounce size. And also coming back above support, 171 down to about 165. You are looking for NVIDIA to eventually set the trend change, right? Either do it like this, breach resistance and do it from here, or come back and do it from here. But you're going to have to do it eventually, right? I need to see the confirmation, because if not, well, the bears are still in short-term control. If we revisit down here, you guys know exactly what I'm doing. Long-term shares, but also selling put options into the 150s, which is something that we've been highlighting for the past few weeks. With great volatility, you make the moves into there, sell the puts down into there, make some money, put it in your pocket, and also we can be accumulating some long-term shares. If you like this company, the valuation right now is quite compelling at about a 24 price to earnings and under a 1 peg. Moving on to Tesla right now. So Tesla also with its own bounce, but same thing, guys, right? No trend changes. That's what I'm really focusing on in today's video and yesterday's video, because many people, they look at big bounce and they say, this is it. This is the bottom. As opposed to, see, that's guesswork. You may as well just let the bulls show you. They've had multiple bounces since December, and none of them have actually translated into an actual trend change. So if we're looking to size in to some swing trade longs, you at least have to be patient enough to wait for the trend change, right? That being said, weekly is coming down into support right now, 360 to 340. So still some work to do for the bulls into resistance above, and all the batch of EMAs to 405 down to about 383. Moving on to Palantir right now. Palantir, see, Palantir is different. Palantir had it going, and even me, I went for a swing trade attempt on the break of these highs, looking for follow through with a tight stop. There was a swing trade setup here with a stop loss below the lows and going for the take profit target into the resistance highs. Unfortunately, we got stopped out, but at least we weren't in the business of absorbing this. And obviously now it's kind of back to there, but you never knew the ceasefire headline was coming Monday into Tuesday, did you, right? It could have easily just unwound down to the 120s. So we can't think like that. It's all a game of risk to reward at the end of the day, right? So Palantir has a lot of work to do as well. The bounce size is okay. They're below the EMAs, but you would like to see the bulls put in a bit more work and reclaim this area and try the same thing again. Try to bounce, set some higher lows, and go for it. So try to get a nice bounce, set some higher lows, and go for it. Then I'll be reinterested in Palantir. For the time being, only long-term share accumulation. If we break into the 130 handles again, any downside moves, you may also see me selling some short puts down here in the 120s. And I say long-term share accumulation. And when I say long-term, I mean long-term. Long-term does not mean 2 months or 2 quarters, right? Long-term is like years. This is the only way that you can justify the current multiple. I mean, the first person, and I can say it because I'm a shareholder of Palantir since $11. I can say the stock's expensive up here while still saying I can be a buyer here of the shares that I offloaded near the highs. Moving on to SOFI right now. SOFI down about 1.57%. This one has terrible price action, arguably the worst price action on this entire list, right? Just sheer short selling, daily downtrend for the past 2 months, right? We have not been able to set one single daily uptrend in the past 2 months on SOFI. So obviously any swing trade longs are out of the question. You need for the bulls to show you where the price action is. If not, you're just guessing. This is the bottom, this is the bottom, this is the bottom, this is the bottom. That's not going to work, right? Wait for the bulls to show you an EMA recapture and a daily uptrend. Then we can take some heavier swing trades to the upside. For the time being, just long-term share accumulation, weekly oversold conditions into a large support level. So selling put options below the market or just accumulation of longer-term shares is probably the only thing that we would be looking to do on SOFI. Moving on to Uber. Before last, Uber down about 0.31%. Not too bad of a day on Uber, but still a little bit soft, right? So even Uber, in the grand scheme of bounces, this is also not the strongest bounce, right? Only about a 38-40% bounce, could be better. You need to see the bulls change this around. If not, the weekly bears are still well in control of this weekly downtrend and of this monthly consolidation phase. At the current moment, same as many names on this list, right? Not good for swing trade longs, in my opinion. The chart's just not the best for that. Overall, though, the only thing that I'm doing is looking for red days, selling put options into the mid-60s, or accumulation. I'm buying Uber shares low 70s down to 60s is the pocket that I want to play based on the valuation alone. Looking for the expansion eventually of the entire market, but also Uber when things get a little bit less cloudy. And right now, the stock is sitting at about a 21 forward multiple, a 1 peg, and a 6.56% free cash flow yield. All very good metrics and great revenue and EPS growth. And last but not least, good old Taiwan Semi. So TSM, see, this is a good bounce of the most recent leg of selling. Big leg of selling, nice, almost 100% engulfing move. So we'll be looking for the bulls to reestablish some price action control, get the daily uptrend, and set an end of this weekly leg of selling, right? That being said, it's consolidated in a nice fashion, not as much as other companies in the semiconductor niche, but still, that was a top to bottom 19% move. It doesn't look like much because TSM has been very strong recently, but still not a bad move there whatsoever, right? So TSM, no swing trades for me at the current time. It's still a little bit too elevated on the monthly timeframes for me. However, if we do pull back here on red days, I'm looking to sell some put options down below 300 towards the 12 EMA. And that's also where I'll be adding some shares. Not that the valuation up here at 340 isn't good. It is very fair in my opinion, right? It's just that I'm loaded from TSM shares that I've bought in prior cycles of the market. So I don't need to, but if I were looking to establish a position in a brand new fashion, well, you know, these current valuations are not bad, but if I'm buying here, you got to be open to the concept of being able to DCA through a larger form correction if it does come. But I wouldn't blame you guys if you're still interested in building a position in TSM. The only thing that I have to say to you guys, right? And I've been in this stock for years and years and years. You have to assume the China risk, right? There's always the perpetual risk of China versus Taiwan. And that's been the case in this stock ever since I bought my first batch of shares in 2022. So please keep that in mind. Now, that is everything for our overall list. So hopefully you guys enjoyed that. Now let's jump into the fun stuff, the biggest gainers and losers of the day. All right, so talking about the first set of companies here, which would be the biggest losers of the day, Restoration Hardware. It has not been a very easy environment for consumer discretionary stocks in the past 3 years, has it? Names like Restoration Hardware and Nike seems like they just continuously print the lows because of just consumer discretionary spending has been quite low, except for travel. Travel's been fairly resilient, which is why if I've been focusing on consumer stocks recently, the only ones that I've really been doing some buys into have been travel stocks specifically, right? But more specifically, the travel operators such as Airbnb and Booking.com, which have been a bit resilient despite them also seeing share price declines. Anything consumer goods, such as Restoration Hardware and or Nike, I'm not really touching right now. Now, Nike had some earnings yesterday. We didn't cover them on the channel, but they just weren't very good. They beat on the estimates, but quarter over quarter and year over year, it was not good. And also management could not guarantee growth for the midterm future. It's going to be a very lumpy recovery story for Nike. So although Nike is currently now at prices that we haven't seen from 2014, I'm not really buying here, right? Because I just think there's better buys with a more clear thesis in the market. I'm all for a good recovery story, don't get me wrong, right? It's just, I want to see that the recovery story is on the other end of the recovery, not still in the trough, right? I really want to see good momentum and good recapture of sales and be sure of what I'm buying, especially guys, when it comes to consumer discretionary. Tech is a little bit different, but consumer discretionary, you really need a macro environment that is conducive to the company's recovery efforts. And as of right now, you just don't have it, right? Inflation is still a problem, at least in terms of perceptions from the consumer. And also the fact that interest rates have been stubbornly high. And also the fact that Nike's execution has been very, very, very weak before the new CEO. He's trying his best, got to give him that, right? And it's just not a company that I'm really looking at all. I'd rather pay for confirmation. And when I say that, I mean, I would rather wait to at least get, when's the last time it had a monthly uptrend? You can go back it was all the way back here in 2021. I would rather wait for confirmation. Give me a nice monthly uptrend, which will take some time, right? But at least I'll know that the selling pressure is over and people, at least institutional money, is having a bit more confidence in the stock. So when I say I'd rather pay and wait, well, I'd rather buy in at a higher price with a confirmed trend that could possibly last for years and years, rather than just trying to perpetually pick the bottom and bottom and bottom and having a grand big opportunity cost of the stock going absolutely nowhere, whereas I make good money on other themes that have been making decent gains over the past 2 years, right? So keep that in mind when you're thinking of consumer discretionary stocks, guys. Consumer discretionary stocks, they need a very good macro environment, and that's true of fashion brands or consumer goods companies like Restoration Hardware or restaurant companies, except for McDonald's, because McDonald's is just too strong, right? So keep that in mind, right? Moving on further down the list, there's a few names that were read today that I'm really interested in. AMPX, they do batteries for drones. AMPX, I'll be very interested if we get a back test down here of this little location, basically like 14 on about 12. That's a big area of interest for me. I started a position down here at like 1080-ish before the pop. We sold a little bit here in the Discord together at about 19, and I'm just waiting for a bit of a re-entry down here. So I'm selling some options. This is a long duration small cap play for me. I'm not looking for, surprisingly, it gave us great upside in a short amount of time, but I'm looking to carry this one for the eventual market cap expansion. It's a $2 billion company right now, but they're not yet profitable. The difference is that they have a very big backlog, and it'll take a while for them to get profitable EPS, but the revenue, the big revenue growth is what I'm looking for. So this for me is a play in which I'm positioning for a multi-year theme, which is drones. And the same thing I can say about a company like FLNC. So FLNC, I started initial position all the way back here at $20 and just currently patiently DCing into it with shares. It is also a smaller cap company, 2.53 billion. It is battery energy storage for data centers. That's going to be a very big theme, guys. Battery energy storage plus renewables, such as T Energy, which just had their earnings yesterday and fell off a cliff. These are two themes that are going to be bottlenecks in the future, right? We know that power and energy are a big bottleneck for data centers, not only in North America, but will be the case worldwide, right? They need the battery systems and also renewable energy. T Energy is local solar, so basically North American production, right? The entire vertically integrated supply chain for solar. And then on the other side of that, you have companies like FLNC and also ENS, which is currently has a much better chart. It is your sector leader for the moment. But the reason I enjoy FLNC is because they're well on to their ramp, right? So the sales pipe, the ramp pipeline is with all small and mid caps, guys, right? It's a question of ramp. And although it can be lumpy sometimes, are they executing on their model? The answer is yes. So you can see it's a $2.5 billion company right now. Look at the sales coming forward, right? So these declines, they're small caps. They'll be highly volatile, but we can pick them up for good market caps. You're looking for total market expansion because of a key theme and driver that lasts for more than just 1 quarter of bad price action. You're looking for the next few years of the theme to kind of expand. And the same thing I could say about TE. A few of you guys asked me like, hey, is it a good time to buy TE? It's a good time to buy TE if you're going to be into it for more than a day, more than a week, more than a quarter, right? This one is a $1 billion company, and you got to be patient, right? Keep in mind, last year they were making no money. At the current time, they're scaling up 2 factories. So of course, the earnings are going to be lumpy for the time that they scale up, but the revenue projections are quite clear, right? So the market cap right now is trading relatively cheap, but we also know that the sector leader, which is FSLR, look at FSLR. If FSLR can't maintain since January, even though that solar is highly in demand right now, just out of favor temporarily, well, TE Energy is also going to kind of struggle to maintain some of those local highs that it established. So I haven't added to my position. I built a position between 4 and 3, took a little bit off the table in the mid $7 range, right about there, and I will be re-adding to my position. But once again, keep in mind, guys, if you're adding to these positions, these are multi-quarter, multi-year themes here. Great if they run super quick, that's a bonus, but you would not be surprised if they can stay sidelined for a while. That's the nature sometimes of investing into companies that are in their early stage of expansion. At least if you're hitting the correct themes, they can prove to be very decent bets over the long term, right? They're basically like, they're not lottery tickets, but they're like your educated, they're not even gambles either. I don't want to use that word, right? They're just educated, smaller cap bets, right? Companies that make a lot of money, that trade relatively cheap in terms of forward price to sales, but they're also very volatile because of their nature being small cap companies in the phase of a very big ramp. The last thing I want to do is find a smaller mid cap company making 0 revenue. Shout out to a lot of the quantum companies out there, right? They had great price action, but they have no revenue. I'd rather find a company that has decent price action, but also heavy amounts of revenue in the future. So keep that in mind. I think those are most of the things I want to talk about. OSS, also something for edge compute that I'm looking into. OSS for me, I'm looking to build a bit more of a position. My initial buys were at 8. This as well, guys. This is military edge compute for AI. Very important in the future, guys. It's integrating AI onto the battlefield. The reason they call it edge compute is because they integrate AI into various systems that are used in very rough landscapes, such as military purposes or whatever it may be, right? Mostly military for this company. Back down here, guys, under 7, this is the accumulation range for OSS. OSS currently a very small market cap company. It was very popular on Twitter to start off the year, and people have just forgotten about it, but not me. I'm building a further position, so I'm not going to go through all of my small cap picks, but when I see them and when I can kind of share my beliefs on the company, I'll definitely do so, but I don't want to see anybody going all in on some of these small cap picks, right? It's good to have positions, but I just want you guys to know that for me, these positions, right, are high 4 figures to low 5 figures, meaning like they're anywhere between $5,000 to $12,000 a piece. But keep in mind, that's part of a multi 7-figure, larger branch of portfolios that I have, that I'm investing into, right? They're nowhere near core positions, but they are smaller, interesting bets that I want to carry forward because of the themes in which they're in. KTOS is something very similar. KTOS has come down a substantial amount. This one was all the rage back here in January, and now obviously having a very large pullback because it's in the whole mid-cap section. So the company is currently trading for $13 billion right now. The profitability is still very thin as they continue to scale operations, but I'm looking at forward price to sales. It's a $13 billion company. It's trading for under 10 times 2026 sales, but push it out a little bit further and you can see they can very easily grow into this valuation or more. So up here, was it overvalued for the time? Yes, but down here is where I'm building a position. My first little nibble of about $2,000 is down here. Adding another $2,000, I want to eventually build like a $7,000, $8,000 position in KTOS. If we fall a little bit further, I will be doing that, but just keep in mind, again, this is part of the sequence of companies that it's a multi-year thesis. Drones and drone defense, will be extremely popular. I'm not looking to swing trade these at the current time. I'm just looking to accumulate positions, right? You can swing trade them too, but they need better price action, right? The last time there was a swing trade here was on the daily uptrend, stop loss below the low. It would have been invalidated, and now they need to go for a deeper correction. So swing trades are off the table for me, but accumulation longs are on the table for KTOS and even something like an AVAV, also accumulating some positions. It's in a similar position to where it's a mid-cap stock, right? And I'm looking to accumulate these mid-caps while they're significantly off the highs, while the thesis for the company's longer-term expansion is unchanged. It's no different than how we invest in large-cap companies, right? Uber's down 35 from the highs, unchanged long-term thesis, great, I'm buying. Microsoft's 35% off the highs, unchanged long-term thesis, great, accumulation longs, right? These small caps and mid caps are the same thing, but you have to be a bit more patient with them because they don't have the history of arguable flawless execution or big historical execution that some of the large caps have. So keep that in mind if you're looking at small and mid caps and if you're frustrated with them because they're not moving in your direction, right? That is the same thing for many of these companies. Same thing with NBIS, right? NBIS is my favorite neo cloud name out there. But right now, you guys know what they're in. It's on my Oracle chart. There was the funding phase, which was last year when these companies were all the rage. Now they're in the execution phase. They have to raise capital either through share dilution or debt. And now in the future, in 2026 and 2027, this is the revenue phase of all of those data centers that are being built. So NBIS is my favorite bet, but I'm pretty sure some people are maybe disappointed. It was breaking out after the Meta deal, snapped back down to 90, and it's just been choppy and going nowhere. If you're in this company, you have to be in it for the long-term thesis, right? We can discuss swing trades all the time, but I'm talking about positional longs here, right? So I am still very interested on building positional longs further in the 90 to 80 range on NBIS, which has not changed this entire time that we've been down here for the better part of the past 3-4 months at this point, right? So that's everything for the stocks to the downside. Now, just spend a little bit of time on stocks to the upside right here. So SanDisk and Micron recovering very nicely today, but still very big retracements by the bears, right? SanDisk's charts are arguably a little bit better because they never lost the weekly. This one's not looking that bad for some expansion, guys. At least they gave you a clear stop loss area. If you're looking for, 800, 900, 1,000 for some swings, they gave you a clear stop loss. Weekly 12 EMA is now established. You're going for the higher low. Just don't overstay your welcome and definitely don't trade this without a stop loss because the last thing you want is to be part of a monthly consolidation phase if for ever which reason the memory names have to do it because they haven't done it in a long time. The same thing can be said about Micron. Micron, the chart is a little bit softer because they lost the weekly. You'll notice here, they never lost the weekly for a long time. What happened here? High above, peak above, and then flush. So you lost the weekly uptrend. You got to get it back. And as of right now, into resistance right now. Micron, everybody knows it's cheap on a forward basis. Some people debate whether or not the company's cyclical or not. We've covered this many times on the channel. The fact that they're locking in 3 to 5 year contracts with the hyperscalers, the fact that their scale and execution goes over and above. I mean, we covered their earnings a few weeks ago. We went over this, right? But the fact that their scope covers much more than data centers in the future, covers the upswing of the PC cycle, the smartphone cycle, the eventual robotics cycle as well. So perhaps this is a more long cycle in Micron's history, and it trades very cheap on a forward basis. So longs from here, I'm not going to stop you guys, right? I'm just saying the price action isn't as good as SanDisk. You would like to see a bit of a daily uptrend recapture, give you a bit of a stop loss, because as of right now, short-term bears are still in control. Some of you won't care. Some of you will just want to buy because it's cheap and you're going for the big expansion. That's fine, but just keep in mind, if you do have more monthly consolidation, testing some of these EMAs is not foreign to some of these companies, right? On big backtest levels. So please keep that in mind. The rest of everything we've covered in recent videos, the strongest sectors as of late have still been some of your photonics names, and they showed that again today. Light, very strong push. AAOI, not that much. GLW, right? Pay attention to them. And Fabrinet and name like Coherent. There's many others as well, like VIAV or things of that nature, right? So a lot of these sectors are extremely strong still. So if we're looking for momentum swing trade longs, you would be looking in these sectors displaying the most amount of strength. So please keep that in mind, right? Drones and defense, they've been out of favor. Defense ETF overall, this is large cap defense, has been out of favor. The space trade has come back into favor a little bit, but even names like Rocket Lab, they breached their lows. ASTS also came below and breached their low. So the price action is not the best, but space trade still definitely something to pay attention to. They're coming back a little bit. The only sector that's been very, very hot and hasn't really lost much has been photonics. And shout out to the memory names such as SanDisk. Micron's coming back, still has good strength, but lost the price action. And EWI, which is your Korean names, SK Hynix and Samsung, 46% of this ETF. But the only difference is you gotta give me the daily uptrends, right? When you lose a big level like that, you lose the weekly uptrend for the first time in like 6 months. You got to give it back to me if you want to see me position for some swing longs with the defined stop loss. If not, you run the risk of just further daily, weekly, and monthly consolidation on these names, which would not be a bad thing, right? Eventually, they all have to do it. So that's everything that I had for you guys today. Obviously, tomorrow we'll try to cover more of these names, but I try to focus on the key themes and where the market is displaying strength. For the time being, that is still in the data center connectivity names, right? So please keep that in mind if you're looking for momentum. The momentum is largely there, but in other situations, such as in some of the robotics names, some of the drone names, some of the space names as well, we're getting some really nice positional longs for longer duration, investments into the market in some of those smaller or mid-cap names, right? So that's everything I had for you guys today. Hopefully you guys enjoyed the video. Damn, man, I try to keep it under an hour and I always go over. I always spend too much time on these end of the video segments here on the biggest gainers and losers. But if it's helpful for you guys, I'm glad to help all the time. Tomorrow, we'll spend a bit more time talking about maybe some of the energy names that we would be willing to possibly position in for the longer term, and just talking about more themes, broadly speaking, in the overall markets. We'll see what the markets have to give to us tomorrow, because that's everything I had for you guys today. So take care. Hopefully you enjoyed it. If you did, would really appreciate it if you give the video a like, if you subscribe as well. These videos are very long. The algorithm doesn't really recommend them that much, I think, at least. So any likes and subscribes really helps me get the video out to more people. And last but not least, if you guys have any questions, or if you guys are looking at any names specifically, definitely leave them down below in the comment section. Always love reading what you guys have to say, and I'll get back to you as soon as possible. Take care. Have a great rest of your evening. I'll see you tomorrow after the close for the last trading day of the week. Peace.